When a green card holder abandons his or her green card, the characteristics of his living trust may change and it triggers a significant tax consequences. Let me explain. Typically, a living trust is a domestic trust. It has two tests to pass, court test and the control test. When the trust fails one of these two tests, trust becomes a foreign trust. Now, this may happen when a green card holder abandons, in this case, her green card, then effectively becomes a non-US person controls the living trust. So, as a result, the living trust, which was a domestic trust, becomes a foreign trust at that moment. When the domestic trust becomes a foreign trust, in a taxation situation, U.S. government considers this transaction as a deemed sale of the assets held in the living trust. Therefore, any unrealized gains in the assets of that trust becomes realized, which means the trustee or the person who abandons her green card needs to obtain new employer identification number for the trust, and on behalf of the trust has to file 1040 NR and recognize gains and pay taxes. This is very similar to the taxation of US exit taxes mark-to-market taxation deemed sale. At the same time, if a US beneficiary receives any distribution from this trust, it triggers the action of Form 3520. This person has to report the receipt of the distribution from the foreign trust on the Form 3520. There is no minimum amount to be reported, and there is a substantial amount of penalty if he fails to report it to the US government. Thank you.